Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market review for this end of trading on Thursday, and this is the 23rd of February, 2017. All right, my friends, a mixed day. We had the NASDAQ and the Russell lower, while we were up again in the Dow and again in the S&P. Now, the metal markets came alive, possibly because I think what you had was the hand on the trigger that people thought for Janet Yellen. But I picked up something that I interpreted, and maybe I'm wrong. My interpretation was when I read the minutes and I paid attention to that, they're missing the budget from the president. They're missing the infrastructure spending. Why would they raise until they have those numbers in hand? And that was my own interpretation of it last night. But watching the gold break out and the silver today, well, that's pretty interesting stuff. So as we take a look at the Dow, what can I tell you? This is a weekly chart, and you're just straight up and away. Remember, back here, this was the election, and the market has soared ever since. So everybody that said from the election that the market's going to crater back down, they couldn't have been more wrong. As we take a look at the daily area chart of closes, you've now gone from 19,694 straight up to 20,797. I'll try to put a line back on there for you, but you can see this break low right here, and it just carries straight on up. This market hasn't backed off. And when we take a look at a daily bar chart with absolutely no indicators on it, you get a pretty good idea that this market's run. And what I know is everybody, including me, every time you put out a buy signal, you know, you're nervous. When's the correction going to come? Unfortunately, if you keep that mentality, you never get into the trade. So it's just how one of these things work. Eventually, you know, you're going to say to yourself, as I would say, and I do when I sometimes put these out, oh, I've waited so long, now I'm in it, and the market's going to chew me up. Well, you don't know. And then if it works, of course, you're the happiest person there is. But higher lows, higher highs, new highs, that's bullish. The market's over the 18-day moving average of closes, which is over the 100-day, so the setups are bullish. I'd like to get to the point where this 18-day average is equal to at least that number to get a semblance of where support might come in without breaking this particular chart pattern. It's not doing it. What has happened is you have now taken, and this is very important, this is that sideways action that I often tell you about, and this is February 6th, so don't think that I've gone back on this chart months and so on. Eventually, when you break out of that, it starts with the market pushing on that upper Bollinger Band, and if it can get over it for a succession of days, and I did write this in my reports, and I pointed out to my subscribers that often means breaks are going to be very, very shallow, especially if you have an embedded reading tied in with it, and that's been pretty much the mainstay of what's going on. When you come over to the March S&P, you got the embedded reading. You had the same pattern. You've backed off, so now it's day up, day down. I was looking at today's action. As it turned out, the market did close higher. For a while, you had an outside day down. We had the outside day, meaning we had taken out Wednesday's highs and lows very early in the session. The question was, which way was the market going to settle? And as it turns out, it settled higher. Now, a market that did have a key reversal day down, and it could be that the market's going to see rotation out of the leader index that had been the NASDAQ into some of the others, was this, the NASDAQ. So the key is to reinstate this bullishness now. You've got to take out today's highs of 53.61 and a quarter. If that occurs, then I will call that a bear trap, even at this level, and I would expect to go up even further in the marketplace. If this is true and the market backed off, you got to start watching very closely the slow stochastic. If you get a reading where it closes under 80, it is a sign this market is in the corrective stage. So got to wait and see what's going to happen there. In the Russell, you hung on to the embedded reading, and I'm telling you, by the hair of your chinny chin chin. It's got to pick up and run tomorrow if it's going to be good. And if it can do that, well, you can make that run to 14.19, but it's got to pick up and run early on. And that's going to be the problem. Actually, today's break low, and I should have done this. This line, this arrow should be pointing down from here. You know, I have a lower low and a higher high. So the trend of the swing line was broken. The bias, however, stayed up because you're over the 18-day average, and the embedded reading stayed in place. It will probably be lost on the opening unless the market immediately pops higher. On the VIX, you're going nowhere, and I have pointed this out. You're stuck, just like I showed you in the stock index at first. You're stuck in all this sideways action. Now, obviously, if you're a bull in the stock market, you want to see this market break out under 10 and keep going down. What that would then mean is that the market's going to widen these bands out, and that kicks up the stock market for whatever reason. In other words, the fear index isn't there. In the bonds, good price action today in the sense that you got higher lows, higher highs. You are stuck in this sideways throng, and people would think, why buy these markets if the Fed's raising interest rates? Well, the problem is, when is the Fed going to raise interest rates? In these markets, well, they don't quite act tick for tick like that. In the 10-year notes, you were up 9 and pushing now into the upper Bollinger Band level. You're 5 ticks away from it at 125.10. The March dollar index, correcting as we talked yesterday, could make its way back to this 18-day average to 100 as it tries to work off its overbought condition. But the trend is up. You've got the higher lows, higher highs, and you're over that 18-day average of closes. In the euro currency, you're getting a nice bounce off the lower Bollinger Band, but you're so oversold it's hard to get short, and this market's refusing to even begin the betting process where you lock in a downtrend and the market tries to come down here. So that's problematic for it. In the British pound, you finally got up and over this high. So now you're still stuck, as I pointed out, in the lower Bollinger Bands, but you're not trending. You just go back and forth there. It's a whipsaw market right now. Treat it as such. I wouldn't trade it, teach it or trade it. Teach it or trade it, if I were you, as a trending market just yet. In the Japanese yen, you still have the higher lows, the higher highs. Momentum is trying to turn up. Can it grab any? It has been a frustrating market for a move just like the British pound, as it's just stuck in this narrow sideways band, which tells me that all these people are talking volatility. Where is it? You're not seeing it in the currency markets. You haven't had a 1% move in stock indices in God knows how long. And so they keep saying it's volatile. I'm not seeing that volatility they're talking about. In WTI crude, you're still pointing to the upside in momentum, but you're now overbought. Any reading that's got a 7 in front of it is an overbought condition. The trend is up with higher lows and higher highs, but you're right into that resistance, the upper Bollinger Band. You keep failing there. If the market corrects, where do you think it might go? I'm going to bet that 18-day average of closes. If you take a look at the rebob gas, I think this is the beginning of an important event. I can only use the word normal. I cannot tell you things are going to happen because I don't know. That's reality. But this is the time frame where gasoline normally puts in a bottom as prices rally into the spring. Now, just think of how the refineries are going to switch over, what's going to happen. We're all going to drive a little more after the winter time. So I think this was a sign that we could be beginning that process. It's certainly not yet turned into a bull market, but it held at the 100-day average, the lower Bollinger Band. It's doing everything it has to. It made a higher high today, could not close over that 18-day average, but it's the beginning of a process. In the nat gas, this is a feeble bounce. Now, like I talk in other markets, when we're talking the stock indices, when they were over, if you'll recall, the upper Bollinger Band, this has had days under. All it did today is get back to the right-hand side. This has been riding the lower Bollinger Band with an embedded reading, still a bearish picture. I want to remind you that our good friends from Modern Trader put out a number of publications, and one of them is this: Technical Trading Tips from the Top Pros. You might want to write this number down and understand you can get it from our website. It's really something you should have in your library. This is the cover of just how it looks. And the articles that it's going to cover, the contents are going to be Gantt square of 9. Do you know what it means? You know how to work with it? Absolute benefits, relative strength, money flow, rules if you're going to bottom fish, and how do you customize a stop? I'll give you an example. I am doing now a video for all of you on pivot points. And where do you put a stop becomes a question if you understand what a pivot point is and how to use them. So optimizing stops, absolutely perfect article to go hand in hand with these thoughts. Either call us, go to our website. You can click right up here if you see me on YouTube, or underneath here, you're going to want to click there on many websites. Say, click here, submit the form. The form will appear. Fill out everything you want. We'll get it to you. I'm Ira Epstein. Thanks for watching, and I'll see you tomorrow.